From the Gies Studio Complex, welcome to this special mock live session with Gies College of Business at Illinois. Please check that your microphone is muted, your camera is turned on, and you are ready to engage with your classmates and colleagues. Now please welcome your moderator, Kate Deering, and your instructor, Gerlando Lima.
Hello, everyone. Welcome to today's mock live class. As you just heard, my name is Kate Deering, Associate Director for Recruitment and Admissions with Gies Online Programs at the Gies College of Business, University of Illinois, Urbana-Champaign. We are so excited to have you join us today to experience a live mock class with Gies graduate programs. For those of you who are new to our programs, Gies offers both on-campus and online graduate degrees in accounting designed to fit the diverse needs of our students. On campus, we offer two accounting degrees, the Master of Science in Accountancy, the MSA, for non-accounting majors seeking to build a strong foundation in accounting. We offer the Master of Accounting Science, the MAS, for students who have a Bachelor's of Science in Accountancy and wish to advance their expertise. In the online space, we offer the IMSA, the Master of Science in Accountancy, which is tailored for full-time working professionals, whether you have prior accounting experience or are looking to pivot into the field. If you're not quite ready for a master's degree, we also offer 4 accounting graduate certificates that offer expertise in specific accounting areas. But really, with a number 1 ranked accountancy faculty, according to the BYU Accounting Faculty Research Rankings, and the distinction of being the number 3 business school for graduate accounting, Gies does provide an unparalleled learning experience. So today, you will get a firsthand look at how our expert faculty and dynamic learning environments can help you propel your accounting career forward. Before we jump into today's topic, understanding valuation using multiples to define assessment, I did want to cover a few housekeeping details. If your camera is on, thank you. I do see some friendly faces already. That's great. I encourage everyone to turn theirs on to fully engage, just like you would in a live class. All participants are currently muted to minimize background noise. So if our professors invite you to speak, our technical team will unmute you. If you have a question during the session, please use that raise hand feature and we will call on you. And a couple other things, we will have a breakout session today where you will be able to collaborate with your fellow attendees. So be ready to participate. Feel free to also use that chat feature throughout the session to engage with the professor and other participants. And then finally, we will save a little time at the end for Q&A. But I am very excited to introduce your instructor for today. Professor Gerlando Lima completed his bachelor's from Rio Grande do Norte Federal University in 2002, and then went on to earn a master's and a PhD in accountancy from University of Sao Paulo in 2007. He went on to complete a postdoc in economics from University of Coimbra, Portugal in 2009. And then moving on from that, Professor Lima is currently a teaching associate professor of accountancy at the Gies College of Business. He also spends time working as a member of the American Accounting Association Board of Directors. He's a financial market consultant in financial and international accounting, and he currently teaches ACCI 500, 501, 503, and 517 in the IMSA, the MSTM, and the MSA program at Gies. That was a lot of information, but thanks for sticking with me. I am very excited to turn this over to Gerlando Lima. Enjoy.
Oh, thank you so much, Kate. And hi, everyone. How are you doing? It's really amazing to see you all here. Hi, Echo, Niti, Nate, Patrick. It's really amazing. Hey, Chris, it's really amazing to see you there. Yeah. So, yes, it's really great to see you here. Welcome to this mock live session. So tonight we'll try to give our best idea how this works. Okay, so this is why when talking with Kate, we decided to bring here one of our classes, one of the topics of 517. So imagine that you are in our program, okay? So I'll try to show you how this live session works. So as Kate said, you can, as you are in the front of the row, yes, with your camera on, yeah, so I can see everybody here. So you can join us type it in the chat if you have any doubt and raise your hand. Okay, I will ask the online team here to unmute you. Okay, but I'll try to keep a pace that as we don't have 1 hour and 20 minutes as regularly we have in our live session. Okay, everyone. So this is our studio. I have to tell you that it's an amazing one. So all the technology here, it's our priority to get in a very best way to teach you these live sessions. Okay, so as you can see, I brought some slides and I brought also some files. All of these files can be shared with you after class. Okay, but we'll share also some handouts and an Excel file. But I'd like to start everything saying thank you so much to Kate, to the online team here, Anthony, Itsu, Frank, Tom, and everybody that is online. You don't know how we work a lot behind the screens, okay, to have and try to get an excellent class for you, okay? So here's what we're going to talk about tonight, okay? So as you can see, I'll try to get you to understand the valuation concepts, okay? I'll show you where this class is, okay? So you can have an idea in which point of the course this class is also. So understand about the valuation models. I'll talk about it very briefly, okay? So how we work with that, and select the appropriate valuation approach for each firm that you must work with, okay? And apply the basic models, mainly the multiple models in a simple valuation approach, okay? So here is what our course is, okay? So you can see that we are in the end of the line. Yeah, it was a little bit hard to choose this topic, but you can see that it's very simple and you can understand all the things perfectly. But for sure, if you had some doubt, it may happen because it's in the end of the road. Yeah. So you can see that we start this course 517 mainly. This one I teach in class face to face here. Okay. But it's one of our classes online with Brian Ham, Brooke Elliott, Ardeen, and Nerissa Brown. They teach this course on Coursera MOOC. Okay. And we start always teaching you all an introduction to financial statements and SEC filings because it's very important to know where the data is. Okay, so you use a lot of AI and a lot of softwares to go online and download data, okay, to move and move forward and calculate all the numbers necessary to make the valuation process. After that, we work with financial ratio and analysis. On ACI 501, we work with this also, but it's deeper on ACI 517. We go beyond the financials, so we can see the 5 powers in the market, and we can see the behavior where the company is, because it's very important not only to use math techniques, okay, but understand what you are doing in the environment where the company is. So beyond the financials, we do that. After that, we jump to forecasting. So we do simple forecast, advanced forecast, and in the end, we go to the valuation models, okay? So this is how we go through. This is the pathway for the course. And why we do that? I think valuation is one of the most amazing expertise from accounting and fundamentals ones, okay, to make a decision-making process, okay? So a lot of other sciences use this kind of valuation. So maybe if you know a lot of economics, financial, okay, finance or business administration, at least you got in touch with valuation, okay? But why, where can we do that? Why we use that? So we compare calculated stock prices estimate to the observed trading price. We provide target share prices. We set a share price in an initial public offering as an example. So this is what the companies do when there is a IPO coming. So you measure how much should be the price of the stock from that company, and you compare if it's a good idea to purchase or not to purchase that stock. Determine the current price of a bond or other financial instruments. However, as I said here below, valuation methods apply more broadly and are useful in making investment decision for internal projects. It's really very important too. Okay, we can use this approach also in managerial accounting, deciding whether a plant or division should be expanded or closed, determining how much should be paid in a merger or acquisition. So on M&A, it's very useful. I think it's one of the most foundations of it. Evaluating an offer to acquire our company also, and make share repurchase decisions, if it's a good idea to repurchase or maybe issue some stocks. Okay, so these are the ideas why the basics of valuation is so important to us and a very important course in our pathway. Okay, anyone you do. So valuation models differ, and it's important to identify the crucial assumptions underlying each model and apply the right model for the given circumstances. So you see that there will be a lot of models to do, okay, to work with. So depending the company you are working with, depending what you want also with the valuation process, you have lots of models that you can use. So it's divided into simple, basic, and advanced ones, okay? So we work with these tonight with comparable multiples. So price to earnings, price to book, and price to sales mainly, okay? And EV, EBITDA, multiple enterprise value, EBITDA, and other ones are used also, but as maybe we don't have time to work with them today, okay? Maybe you must come in, yeah? You must come and know the other ones we do here, okay? So the advanced one, it's also very useful. And as I told you, like it depends what you want. If you want only a very simple valuation, the simple basic ones are the most used. But if you want to go deeper and maybe measure by your own valuation process and you need the forecast with a better valuation, so maybe the discounted cash flow, dividend discount, and residual income will be the best one for you, okay? So for tonight, as I told you, we work with the simple basic one. We work with comparables and multiples, and mainly price to earnings, price to book, and price to sales, okay? So one very important concept in valuation process is the intrinsic value, okay? We can divide not only the value into three different ones, okay? I think you have heard about something called book value. Yes? Did you heard about this? Book value? So book value is the historical one we have in our accountability. Yes? And maybe you learned about market value too. Yes? Market value. So it's the second one. So market value is the value that you see being traded on the exchange. Okay? And the third one is the intrinsic value that it's so important to us tonight, yeah? Because the intrinsic value is the value we will calculate, and in the valuation process, the idea is that you calculate the intrinsic value to compare with the market value, okay? So if your intrinsic value is lower than the market value, so the market value is overstated. So maybe it's not a good idea to purchase that stock, okay? But if the intrinsic value is higher than the market value, okay, so maybe, I would say maybe, okay, don't try to purchase as soon as possible, okay, don't do that. But it's an idea that the price is understated, okay, and it's a good idea to purchase that stock, okay? So that's why intrinsic value is so important to us tonight, and I'll show you how to calculate that. So intrinsic value should equal stock price, but as we know, market value, the market value that you see there, there's a lot of variables included, like demand, okay, demand from people from that stock, that makes the intrinsic value different from the market price. So sometimes they differ, and in that case, investors can earn excess returns. As I told you, like if you calculate intrinsic value that it's higher than the market value, so that's an opportunity to make some money. Okay, so that's the idea about. So I'm going to stop now. Okay, I'd like to make this poll. So this is how we work in our classes too. You see a pop-up on your screen now. It's not a virus, okay? Don't worry about that. So it's a poll that we do with you, so you can maybe show us how you are like understanding the class. So I'll give you some seconds or minutes, maybe how fast you are to click the button there. And I can review it, okay, everyone? Okay, I see your question, Joseph. So, is it statistically true that intrinsic value tends toward market value historically? The idea, I think it's more the opposite. Like as the idea is that market value is intrinsic price plus desires. Okay, so intrinsic value should be fundamentally more true, okay, than the market value. Okay. Oh, I see a lot of people from abroad. That's amazing. I have to tell you that I really love this university because it's so international. Yeah. So you can see that my accent is a little bit tricky. Yeah. Maybe it's more Latin. I don't know correctly, but you are very welcome, Joseph. Do you have more questions, Itsu, when they are doing the poll? No? Okay. Oh, El Salvador. That's amazing. That's great, Diego. Me gusta mucho. Okay, so I think we can stop the poll. So I can see that, and I can share the results. Thank you so much, online team. So as you can see, when you are answering this poll, the lines are running, okay? We can only see the bars running. We cannot see who is answering, okay? Just to let you know that, okay? So don't be shy to answer this, okay? And I can see that most of the students marked letter C as Charlie. And I would say that this is the correct one, okay? So which of the following statements about intrinsic value is true? So intrinsic value always equals the stock price. No, it's not, okay? It can be higher or lower. Intrinsic value is the market capitalization of the company. No, it's not, okay? And the intrinsic value only considers historical financial data. No, it's not. You may use also some forecasted amounts, okay? So you can use growth and it remains to the future, not only historical data, okay, everyone? So C is the correct one. Investors and analysts attempt to identify intrinsic value using valuation models. Yes, this is what they do, and this is what you do after this class. Okay, so let's work now and saying about the valuation model, how we work with using market multiples. Okay, so the idea here is that using this too, okay, valuation using market multiples does not have a rigorous theoretical underpinnings. So the idea is that I use the market multiple valuation models, okay, and summarize all of it in one amount. And with that amount, I will try to use some math to find my price. Okay, so how do we do this? So the value comes from the summary performance measure times the market multiple. Okay, so I will do like market multiple is the average that I will find through other companies. Okay, and the summary performance measure, it's the amount that I will multiply to that multiple I will use to find my price. Okay, so here is an example of it. Okay, so my equity value, my price, equals to my performance measure, my EPS. EPS, if you don't know it, it's called earnings per share. And I have to tell you in advance that this is the only ratio in the world, okay, that it's mandatory to all the companies to provide it, okay? So if you ask me, like, what's the most important ratio maybe in accountants, I would say EPS, okay, because it's the only one that it's mandatory, okay. All the other ones, debit to equity value, current liquidity ratios, okay, all the other ones, quick ratio, they are very important too, but not mandatory as EPS. So with EPS and EPS forecasted times the multiple, the average multiple that it's price divided by earnings per share, multiple from other companies, I can calculate my company, the company I want to calculate, okay? So these models are often used as a shortcut valuation method, also referred to as a method as comparables, this method of multiples, okay, everyone? So is it very easy to do it? Okay, so I brought an Excel file to work with you. No worries about that. We'll calculate here and make some examples from some companies, okay? I know that this theoretical part, sometimes it's a little bit word, mainly that, as I said, is an end of a course, okay? But we'll do it. But the idea here is, John, you are saying that it's so easy to calculate. So even though if it's easy, so there are some weak points that you must follow, okay? And you must know it. So the conceptual problems from them I brought here for you, like if comps, if comparisons are wrong, if they are mispriced, so valuation is wrong. So if my multiple that I'm using is incorrect, my valuation is incorrect, okay? The second one, there is a circular reasoning, okay? So price is uncertainty from price. So I'm using price from other ones to calculate price. So this is a negative approach, okay? Because if the price is, if I'm calculating price with price, maybe it's circular, as I said, and it's what we say in economics, it's endogenous, okay? So something that is endogenous, there are some mistakes made that maybe we cannot have it corrected when we calculate our one, okay? And the other one, it violates the tenet when calculating value to challenge price. So I'm going to calculate my price. I'm going to challenge. I'm calculating intrinsic value, okay? Don't put price into the calculation. And unhappily, we are doing this here, okay? So these are the contra that we have, the concept, the contra concepts we have, okay, to do that. And I have to tell you, it's extremely easy. It's only math when you see that, okay? But there are some portions that are very difficult. Imagine that I will calculate the price to Walmart, okay? So when I want to calculate to Walmart, I will try to find an average measure in the market from a team, from a group, okay, to calculate my price, the calculate price for Walmart. And maybe I would say, let me say, I want some examples here. Can you type here in the chat some examples of companies that I can use to compare with Walmart? Let's see if you can give me ideas. Target, okay, Target. I can see Amazon. I'd like to talk about that. I'm gonna list first, okay? Carrefour. Let me say Best Buy. I saw Best Buy there also. Kroger. What more? Audi. Okay. Costco. Sam's Club. Okay. So, yes, I think we have a lot here, yeah? So, trying to identify good peer group is hard. Yes, it's extremely hard because, look, as an example, sorry, Audi is a little bit different, yes, from Walmart, because Walmart sells like in the internet and face to face, yeah. So I think Audi could not be a good one, yeah. Best Buy, I don't know. I think the merchandise on Best Buy are extremely different from Walmart. Yes, maybe it should be not a very good comparison. Amazon, I would not say Amazon, yeah, because Amazon is on an online one, yeah. So, and Walmart is face to face and online at the same time. Carrefour, yeah, it can be Carrefour. Kroger, I don't know. I think it's the size, it's different, yeah. Costco, actually, Costco could be good one. Yeah. Sam's Club is more portable with Costco, yeah, instead of Walmart, maybe. So did you see how it's hard to get the most like synchronized ones, like more similar ones here? It's extremely hard. Okay. So even though I like the process is easy, okay, but to choose the company is extremely hard. Okay. So different multiples will give a wide range of answers and evaluations. So the ones that we will choose here, okay, depending, like if I only use like Target and Costco as an example, it should be different if I like choose Target and Carrefour and Aldi, Costco and Sam's Club. Did you understand? So depending the cluster you make, okay, the valuation can be different. Okay. So this is another point. And the other one, irrelevant if in loss position. Okay. So if the company have losses, okay, so it not be good. Okay, it's not a good option to use it. Okay. So despite of it, like all of these contra and these hard points to make the comparisons a little bit difficult to do, this is very used. Okay, this technique is very used. Okay, everyone. So going ahead, I have here the steps. And the steps here, if you follow the recipe we have here, okay, if you have the recipe, you must only follow the steps and you do it really very well, okay? So the first step, select the summary performance measure to use as the valuation basis. So if I'm gonna use price EPS, price earnings, okay? So I use price, I use earnings per share. So I must go through all the data. I have it. So which ones are the database? So you have Yahoo Finance, okay? You have the 10K of the companies. Who know what's oh, sorry, the 10K I put, yeah, 10K. So can somebody tell me what's a 10K? Because maybe there is another person here that doesn't know what's a 10K. So the 10K is a little bit different from the annual report, okay, Poshang? So the annual report, it's the one we have in the website of the companies, okay? The 10K, it's what Prakash is saying now. It's an SEC filed, okay? And it's a yearly report, okay? A little bit different from the annual report you have in the company's web page. So in the company's web page, you find the 10K also, or you can go to Edgar. This is the system from SEC, where you can find SEC filings, okay? So you learned this in the first classes, okay? So this is why I'm asking you to tell me what's a 10K, so the other ones that don't know it, okay, can understand it, okay? So you can find these information on Yahoo Finance. If you can open in your computer there, Yahoo Finance, okay, you can type which kind of company you want to analyze, like Walmart as an example. Okay, you can go to yahoofinance.com, you type Walmart, and you can see that most of the information that we work today is there. Okay, so in the second step, we select the comparable companies. So this is what we did in the previous slide when I talked about Walmart. Okay, so I would use, and I will use tonight, Target and Costco to be the comparisons to Walmart. Oops. as an example. Okay, everyone? So on step 3, compute the market multiple from the comparable companies, market values, and performance measures. So I will get the companies, I will calculate comparables, okay? I will calculate the average, and I'll compute the target company's value using its performance measure, and I will calculate equity value per share in the end. Okay, so I will do this process with you with a few seconds ahead. So I would like to stop a little bit again so I can get your attention. Okay, so here's the poll. Yes, companies provide the 10K. They filed the 10K on a SEC website and on their website too. Okay, so Edgar is provided by SEC, but 10K is provided by companies. Okay. Okay, I see that we have 83% of students that answered that. Yes, Diego and Bree, thank you so much. Yeah, you answered Diego really very well. So 10K is filed annually, okay? Quarterly is the 10Q, okay? The biggest difference between 10K and 10Q, it's because 10Q, it's a very like lower information provided, okay? And it's not audited, okay? 10K is audited. And maybe you are asking yourself, why 10K is audited and 10Q is not audited? Audited because auditors need vacations. Okay, so imagine that every year, from if you want to be an auditor, you don't have vacations from December to May. So if you don't want to do that, okay, if you want to have vacation on that time, don't be an auditor. Okay, that's the tricky point. So online team, please, you can stop and share the results. Okay, so I see that most of the students mark it C as Charlie, and then, yes, that's the correct one. Oh, I only brought C correct answers today. Yes, it's so yes, I have to change the next time. Yeah, it's not changing. Yeah, so they have a strong theoretical foundation. Is this correct for multiple valuation? No, it's not. Remember that we are using pricing when prices inside it. Yeah. So they are complex and provide precise estimates. No, they are not complex. Okay, they are very easy to understand and to measure too. Okay, so they are the only acceptable valuation models on the gap. Oh my goodness, this is a hard sentence. Yeah, so bad one. So no, it's not. Okay, so yes, C is the correct one. So yes, yes, that's true, Chris. I'm up to it. Yeah, so it's only C's today. I don't know why. Yeah, so it should be G. Yeah, G as Gerlando, but they didn't bring it. Okay, so let's go ahead. So simple valuation ratios. This is what we will calculate now. Okay, everyone. So I see that we use price to earnings, price to book, price to sales. We have also EBITDA multiple and other ones. Okay, but I will only do these three tonight with you. Okay. So because we don't have time unhappily, okay, but for sure we'll be very happy if you do our courses. You will learn the other ones, okay? So for selecting the appropriate valuation, it depends, okay, as usually in a business, everything, I think you must make a tattoo on your back when you are here enrolled in our courses saying it depends, okay? So business life cycle, if it's a mature, if it's a startup, or if it's a declining company, you must use a different one, okay? industry also. So as an example, for banks, you have a kind of valuation process. As banks, it's very mandatory, the amount of equity, the amount of debit, okay? So it incorporates on the valuation process. And peer norms. So depending on each kind of peers you are calculating also, there is a very good valuation approach, okay? So here they are. I brought some characteristics from them, okay? So for PE, PE says price to earnings. So easy to calculate. You have only price and earnings per share, okay? Commonly used, often very used, okay, and applicable only for mature companies because mature companies don't have losses, okay? So this is why it's most used. For PB, price to PB, so price to book value, okay? Easy to calculate too. Equity focused because I'm calculating with book value. Okay, so book value means that I have assets equals to liability plus equity. So if the equity is normalized, it's follows some code, some rules. Okay, I must use PB instead of PE as an example, and it's used more for companies from sectors. Okay, that the amounts of assets, liabilities, and equity are follows rules. Okay, price to sales. Maybe you are thinking about, hey, you are only talking about mature companies, yeah? So, okay, we have one here for startups. Okay, so price to sales, it's very used because sales is not affected by negative amounts. Okay, so it's not earnings that can be negative when you are a startup, okay, or if you are a declining company. So it's not targeted by that. So sales, it's a very good proxy for all the styles, okay, all the operating cycles from companies. So with that, I have the last one. Unhappily, we're not gonna cover this one. Enterprise value EBITDA. Okay, it's very used too. I don't know why people love it EBITDA so much. I just have to tell in advance that I'm not a fan of it. Okay, but I have my ideas. Sorry, and focusing on operational free cash flow and applicable for mature companies. Okay, everyone. So let's talk now, and I'm going to open an Excel file. The online team will it will upload you two files there. The first one is an Excel file called market multiple. This is the one I will show you how to calculate the multiples and the prices, okay? And there is a handout. This handout we use in the breakout room, okay? So you calculate by yourself with your team, okay? So let me firstly, and so we cannot lose time, let me go to this Excel file. So this Excel file is the one you have with you, okay? So I divided this file in 3 parts. So I am showing you here how to calculate the PE, the market multiple PE. Here I have PB, and here I have price sales. Okay, everyone? So this is how I divided this file. So as you can see here, I'm gonna do PE, and you see how it's easy. So what did I do? So, or maybe you are asking me, what did you do, Gerlando? So in the morning, after my breakfast, okay, I went to my computer and I said, let me do some valuation. I'll do the valuation from Walmart. So I put here Walmart down and I tried to say, okay, let me choose some companies. And as I told you before, I chose Target and Costco, okay? I went online on Yahoo Finance and I picked up their current share price. So for Target, the time I was looking at, I know that the market is melting, okay? So this is the price in the morning. So I had Target as this value and Costco as this amount. Okay, everyone? Got it? If you wanna change that, you can do it. This is your file. You can do whatever you want, okay? So I'm gonna calculate firstly the multiple. Remember the sequence of the recipe? So the first thing is I will calculate the multiple I will use. So here I went to Yahoo Finance also, and I calculated, I brought the earnings per share from Target, and I brought also the earnings per share from Costco. So remember what I said? Earnings per share is mandatory. So anytime you go online, you have this amount, okay? So easy to bring. So I calculated, so I divided, you can go here, you can come here on the Excel file, and you see that I made this division. You have all the formulas there, okay, everyone? So with that, I calculated PE to Target, I calculated PE to Costco. Here is the average, okay, between both numbers. And here, this is the tricky point. Look, if you put the mouse on it, you see that there is a note. It's a forecasted earnings per share. So I had that number with me, okay, before. So I made the forecast. And this is before this class, okay? You know how to do it, okay? You know how to do the forecast. But you can go online also and see how much is the forecasted amount for earnings per share from Walmart calculated by other people, okay? So the analysts are the people that will calculate that. And you can find also on Yahoo Finance, okay, everyone? So now we go to the formula. Look, I calculated the multiple. I brought my forecasted amount, and I only did this. I multiplied PE times my earnings per share forecasted. So look, here I have the price to Walmart. Now, I would like to, can you go to Yahoo Finance and see how much is the price for Walmart? How much is Walmart's price now at this moment? And you can type in the chat. So Joseph, EPS is mandatory, okay? So as EPS is mandatory to provide, so even though it's quarterly, there will be the income statement. It's mandatory to provide the income statement. So it comes with the income statement, the earnings per share, okay? So it comes with the 10Q also. Okay, 85.20. So let me know. We calculated the intrinsic price, okay? So what about the price from the market? What's a good idea to do? Purchase or not to purchase this stock? Is it a good idea to do what? Can you type in the chat, please? So would you purchase, Patrick? So James, I say no. Okay, Patrick, you said no, not purchase. Celestia, you're saying purchase. I see that. Everton, sell. No, EPS is low. So I would say that the amount you calculated that the intrinsic value should be 84.77. So if I compare with the market value is overstated, okay, overvaluated. So it's not a good idea to purchase that. Your price is lower. The calculated amount you calculated is lower, okay? So price in the market, it's high. So it's not a good idea to do that. Did you understand, everyone? Okay, so let's go to the next one very briefly, because we can go to the breakout room. So the next one is PB, okay? So PB, I brought again share price. I brought shares outstanding. Share outstanding means all the shares that are being traded online at this exact moment in the stock exchange, okay? So I multiplied current price times share outstanding. I got market value. So I brought those numbers here, market value, and I brought here book value of equity. Book value of equity, you can go to the 10K or Yahoo Finance, okay, and bring the amount of equity you have from that company, okay? So I calculated Target, I calculated Costco, I calculated the average. And for Walmart, I calculated, I brought here, and you can do this. Look, you can come here and see the note. Oh, sorry. Book value equity divided by shares outstanding. And I multiplied by the multiple. So I got 119.557. Okay? So 119.57 means that it should be good to buy. Okay? So did you see how it changes? And this is what I brought you today. Like for PE, as an example, it says don't purchase. For PB, it says purchase. And I calculated here PS, and I want like follow again how I followed the other ones. You can do it by yourself after class, and there are notes that you can follow. But here it says purchase. Here says purchase. Here says not purchase, and here says purchase. Which one should I follow? That's a tricky point, yeah? So remember what I said before? What is the best multiple I should choose for each company? This is one tip, okay? The second one is some people, like they make the average of all the multiples calculated, the price calculated by the multiples, so they compare the average with market value. This is another way too, okay? So maybe PE should be the best one, okay? Because it's a mature company, it doesn't follow rules to equity, okay? And it's very close to PS, okay? So just a tip, okay? You can think about yourself. So now that you know how to do it, okay? Let's go back to the handout. So have a handout with you. It's a PDF file. So we will put you in a breakout room. So Katie, how many minutes you choose? 3 to 5 minutes?
It depends. Is that enough? Is 5 minutes enough?
Yes, it is. I think they can do that.
Okay, let's do that.
Okay.
So let's make
So
sure you introduce yourselves and then get to work, right?
yeah, that's it. So this is what I would like to talk about. We used to do a lot of breakout rooms in our courses. Okay, sometimes we don't do that depending on the class. Okay, sometimes we do it. Okay, so the idea here is that we are going to open the breakout rooms. So introduce yourself, make some friends. Okay, say hi to everyone, and try to solve 2 questions that are in the PDF. Okay, everyone. When you come back, I will solve with you. So see you in 5 minutes. Hey everyone, welcome back. I hope you enjoyed your breakout room with your friends. You made some friends there also. Yeah, so as you can see in your PDF file, you have 2 questions. Yeah, 2 problems. Okay. So the first problem is this one you can read with me. Peer group, PE forward, NWL, ENR, EPC. These are companies. Okay. 10.87, 1109, 1290. So calculate SPB's equity value per share using the average peer group PE multiple, assuming SPD's EPS forecast equals 4.39. So this is what we usually do now. We ask maybe one team, you can raise your hand and participate in this live session. So is there somebody that wanna maybe calculate this? Oops. Is there somebody that wanna share your screen or maybe show us how to calculate it? Here.
Chris is raising their hand.
Oh yeah. Thank you so much, Chris. I had here, I don't know what happened with my computer.
In
It's
case
tricking me.
there are no other volunteers, I'm happy to.
Yeah, I'm really happy that you're raising your hand too. So
So,
can you tell me how you calculated this one, Chris?
yes, we used the example, the very first line that you had in the handout, the calculating for the PE, and then really what we needed to do is average these 3 numbers, which we
Yep.
got as 11.62. And then we multiply that by the 4.39, and then we got the final 51, about 51.01 is.
Yeah, that's I'm happy that I got correct because you are amazing. So, yeah. So I was afraid maybe I was incorrect, but you did awesome. So thank you so much, Chris, to participate. And let's go to the next question, okay? Now, so I can see that Amos and Nitin, Nitin or Nitin? Nitin, yeah? So Nitin, you raised the hand. So let's start by the first, okay? Nitin, Amos raised the hand first. So Amos, am I saying your name correct, Amos?
Yeah, it's Amos. That's it.
Oh, okay, that's fine. How did you do question number 2, the second one?
Okay, so with the question number 2, I think the question gave us the price of the share, which is $99, and we have our
Okay.
earning per share to be $4.39. So how to find the PE is the price of the share over the earning per share. That's the $99 divided by the 4.39. So the answer was 22.5655. Sorry.
Yes, great. 22.6. Yeah. So this is the multiple we calculate. So you can see that we made like the regular way, like I calculated before in the Excel file. Yeah. And this second problem, it's showing you how you can calculate backwards. Yeah. To calculate the multiple and use the multiple with other companies. Okay, everyone? So these are the 2 ways we can work with that. So yes, I think we are in the end of the line. Okay, so we usually open for questions, but Kate, I'm taking the floor to you now. Yeah.
Yeah, no, great session, Professor Lima. Does anybody have any questions? We do have just a couple minutes here, so if you have a question, go ahead and raise your hand, and we will unmute you.
Yes, please.
This is your chance. Any questions that you have on the topic, or just how these courses work, anything like that?
Yeah, so as I was saying, this is the style we do in class. Okay, so you try tonight a very full live session with polls, breakout room, handouts, Excel files, and all the things that we try to do to get you engaged. So that was the idea here. Okay, so maybe I hope you had a lot of fun. I had a lot of fun here. Yeah. So I hope you had a lot of fun too. And you are totally open now for questions. The files, Katie, maybe you can provide the files to them, or maybe the online team can provide the files now, or in a different way. Oh, there is a question, Stephanie. Yeah.
Go ahead.
There is a question, like Stephanie is asking, what's the average class size? So I think it's for you, this question, Kate.
That really just depends on the course. It could be anywhere from 65 to maybe 200, 250 people in a specific live session. Just to give you a little background, our live sessions are offered by professors 2 to 3 times during the day that they host their class. So you only have to attend one. It's the same course or the same live session will be repeated those 3 times. And then we also do share the recording after. So a lot of opportunities to not miss out on those live sessions.
Yeah, I see another question that was answered by Chris and Jam. Yeah, like, do we have to have any foundation course before taking up this course? Yes, this one, as I told you, this live session for today, it's in the end of one course, 517. So I try to be very simple, okay? Very simple, and trying to give you all the information necessary to do the entire class, okay? But for sure, there are many other classes before this one, okay? And for sure, there is a pathway to you, yeah, to go through it. You cannot go to the advanced courses when you don't have the intermediate or basic courses, yeah?
Yep. And you can reach out to us if you have any questions about, any of that. So we're happy to help.
Oh, Diego, there is a very good question, Diego. Like, as Katie said, like we have usually 2 live sessions per day. The live sessions are the same content, so you can choose which one you will participate, okay? And after class, the online team will upload the recorded session so you can watch anytime you want, okay? And you have all the handouts and all the Excel files with you. So let me see if there are other questions. Does every course have a research paper assignment? Oh, no, Joseph, no. It depends, okay? So our courses are very professional, okay? We have more like professional cases and real world cases, okay? Like as I brought today, I brought real data, okay, to calculate an exercise here with you. So this is what we try to do, as we always try to bring real data to our classes. Oh, I think this next question is for you, Kate. Like Nahashon, what makes them MAS and MSA?
So yes, those are two of our on-campus accounting degrees. The MAS is going to be for students who already have a Bachelor of Science in Accountancy. So typically those students move into that program. But if you don't have, you can have any type of major from your undergraduate in order to pursue the MSA. And then moving into the IMSA, we really have students from all different types of backgrounds, but typically the IMSA is for working professionals who are looking to, for the most part, get into the field of accounting for the first time. But then, of course, we also have a lot of mid-level professionals that are looking to maybe move into that C-suite area. So a little mix of both. So I hope that answered your questions. It looks like maybe we have time for just one more. As far as the exams, Gerlando, do you know how do you give exams in your classes?
Yeah, it's happening. The exams are happening this week as an example. So you go to Canvas. We use Canvas, the program used by the university. Okay. So it's our environment, the university environment. So we do exams online. Okay. No proctoring, no proctoring. So the exams are made to you to use notes, use your computer. Okay. Use all your material. And most of the times it's a 3-hour exam. And most of the times also there is only one exam per 8 week course, okay? So it depends on the faculty also. It's multiple choice, it's open, it's an essay to write. It depends. It depends a lot which kind of course you are doing, okay? But I hope I answered the question.
Perfect. All right. I just answered one more question in the chat, but I think, just to respect everybody's time here today at 7:03, we are going to wrap up. And so, Professor Lima, thank you so much for such an engaging session. I always enjoy doing these with you. They're super fun.
Yeah, thank you so much for that.
Yeah, and we hope everyone who joined us today, this was really just a unique opportunity to experience a class and connect with a member of our faculty team. So we really appreciate you taking the time to join us. For those of you that are considering an accountancy degree, you can check out this slide that we're going to go ahead and put up as far as the application deadlines that are coming up. So if you're interested in an on-campus MSA, that has a deadline of March 31st in order to start this summer. The on-campus MAS has a deadline of April 1st for a fall start, and then the online MSA has a deadline of April 3rd for a fall start, which would be in August. So if you have any questions, don't hesitate to reach out to our admissions teams. Our contact information is on this slide. But really, thank you to everyone for being here. I know everyone's very, very busy this time of year, so we really appreciate you taking the time to learn a little bit about how we do things here at Gies, and we really hope that you have a great rest of your day. Thanks, everyone.
Okay, thank you so much, everyone. I hope you had a lot of fun. Bye-bye.